I just want to start with that last name, which my colleague Sonal mentioned, Aarti Industries. It's been many quarters of, I think, disappointment, and the stock perhaps is reflecting some of that. What is your assessment with this one? There are many people who've made a lot of money in this name, holding it over the years. You think it's at a point where it's starting to factor in the worst?
Yeah, good morning, Prashant. For Aarti Industries, what we have seen over the last few years is that there has been a bit of slippages from the execution front. The contract that was to give them a good growth, that unfortunately got terminated, though they have received the money, but those facilities, what we are seeing is that have taken time to kind of come to a full utilization. And on the portfolio front, you see the Aarti Industries has a relatively higher exposure when compared with its peers to a discretionary demand. And that way we have seen a bit of pain continuing over the last few quarters. So if you take the textile chemicals or the dyes and segment pigments, that's where we've seen a bit of pain continuing, and there the recovery is expected probably the next couple of quarters. So that is what the stock is currently factoring in. The capex remains strong, and hopefully that should start contributing. The management has given a guidance of 15% EBITDA growth for FY24, though remain confident of having a CAGR of 50% over the next 2 years. But with the weakness that we are seeing globally and mainly in the discretionary demand, we need to see whether that guidance would remain intact a couple of quarters down the line. So that's where the street is a bit concerned. But as you see, probably in the medium terms, the capex that they have done and that they are making should start contributing to that.
All right. Hi, Ranjit. Good morning. Ranjit, always good to hear you. And in fact, your alerts as well with regard to some of these prices and demand trends are spot on. So you've got that quite bang on, I think, in the last 12 to around 18 months or so. Ranjit, the problem is from here on, some part of the street believes that maybe we are in for peak earnings from some of these companies. And there's a risk to earnings from here on. Remember, it had a big phase of re-rating. And now we could be in a phase of a bit of a lull. Are you in that camp? Do you think that maybe the next 12 months or so at best we'll get sideways movements of these stocks?
Yeah, so we have seen a dream run for most of these chemical companies over the last few years. Some of them are ahead of the fundamentals at this point of time. And then what we are seeing is that the strong growth of few years, FY24 is likely to be a bit of subdued earnings growth. Most of these companies have a exposure to both domestic and are also on the import substitution story. What we are seeing on the export front is that most of the MNC companies have started raising profit warnings. For them, it's the first half of the results. So quite understandably, they are also toning down their guidance. If you look at the commentary, this is largely driven by the destocking, which is on the back of steep price correction that these companies are encountering. So that they remain hopeful that should get normalized in 1 or 2 quarters. So to that extent, for Indian chemical companies which are in higher exposure to these segments, we will see a bit of slowdown coming in. But we remain quite optimistic on the structural story of the chemical industries. So this is most long-term story where we do expect increasing outsourcing story to pick up. But as you rightly pointed out, since some of the companies have just gone a bit ahead of their fundamentals, so we do expect a bit of cooling probably in the near term. And most of these names should give us a good entry point so that the structural story is what one can still be in.
Okay. I wanted to particularly talk about Rallis, Ranjit. They reported numbers over the weekend. What did you make of the numbers and what could this mean in terms of what, Tata Chemicals could post? Because Q1 has seen price cuts from a lot of soda ash players as well. So what is the prognosis here?
So in Rallis, the results were largely in line with expectations, where we have seen domestic seeing a mid-single digit decline. The pain was in the international business, which declined by almost 30-odd%. So that kind of reiterates our prognosis for the 1Q, where we have said that steep price decline is what is likely to create the challenges. And that is where the performance was weak, but it was in line with our expectation. When you talk about Tata Chemicals, Rallis is just 10% of their EBITDA, so it does not impact either way. It's too small to move the needle for Tata Chemicals. Tata Chemicals is largely a soda ash player, and within that, the US operations is the one that moves the needle for them. We haven't seen much of a price correction. The pricing in the US has been largely stable. But due to opening of China, what we have seen is that there has been a bit of higher imports into India, and that's where we have seen almost 12% price corrections from the fourth quarter to 1 quarter. So that is what should impact the domestic EBITDA to an extent. Domestic EBITDA contributes around 26% of the overall EBITDA for Tata Chemicals. So we might see a bit of pain on that 26% of the EBITDA.
Okay. One final question. You expect Navin Fluorine and PI Industries to outperform. Both have exposure to the export markets, which has been kind of challenging. So what is working for these two companies that's perhaps not working for the others?
So if you look at 1Q preview, what we have highlighted is that it is a challenging quarter for most of the chemical companies, where we have seen that agrochemical have seen a steep price correction. On the chemicals front, there has been a weak demand, which is highly exposed to the discretionary side. But the contracted-led exports are still holding off well, and that's where we see a part of SRF, Navin, and PI are still doing well. For Navin, most of the Dahej capex got commissioned in the third quarter, so they have an easy base. We will see the growth continuing till the second quarter, and from the third quarter, that Dahej would be in the base. While for PI Industries, there is a product concentration, and the innovator has been upping the guidance on that front. The innovator follows a calendar year from October to September. So there again, we have a bit of comfort till second quarter. So these are the two things why we see Navin and PI will tend to outperform in the 1Q.
All right, Ranjit, we'll leave it there. Thank you very much for your time. It's always a pleasure speaking with you, and hope to have you back soon again on CNBC TV18. Thank you.